Hello and welcome to this Kendall Hunt Publishing Company webinar, Using Excel in the Classroom, Producing Industry-Ready Hospitality Business Graduates. Thank you for joining us. Today, Dr. Michael Collins will be demonstrating how to use Excel in the classroom to develop in hospitality and business students the knowledge, skills, and abilities to create post-graduation success. I encourage you to familiarize yourselves with the Q&A and chat functions. If you have a question, please feel free to utilize either tool, and we will have a dedicated question answer time at the end of the webinar. This webinar is being recorded, and you will all receive access to the recording once the webinar is complete. Thank you again for joining us, and from here, I will turn it over to Michael.
Good morning, everybody, or good afternoon, depending on your time zone. Thanks for being here today. I'd like to start just by giving you a little bit about my background. I started working in a hotel when I was 18 years old as a bellman, moved to the front desk, night audit, and just fell in love with the hospitality industry and the hotel industry specifically. And for the next 25 years, I worked in the hotel business, most of that time, 15 years as a general manager. Most of that time with Hyatt Hotels Corporation, managing hotels in Atlanta, the Hyatt Regency in San Francisco, and one of the Hyatt properties in downtown Chicago. Loved my years in the industry, but it was time for a change. So about 15 years ago, I earned a PhD from The Ohio State University and began a second career in higher education. I've published 2 Kendall Hunt textbooks, one an internship handbook, and the second a hotel and lodging management textbook. Excuse me. Today, what I'd like to talk about is how to use Excel in the classroom to ensure that your students are prepared for post-graduation success. I want to demonstrate how we provide students with the knowledge and ability to create and modify Excel workbooks to analyze business data, the knowledge and ability to display data using Excel charts, the ability to explain and analyze a profit and loss statement, an understanding of benchmarking, and the ability to calculate variance, expense ratios, percentage change, contribution margin, and profit, as well as how to create a financial forecast. In my 25 years in the hotel industry, I was constantly on an Excel spreadsheet, whether I was forecasting projected demand and projected business levels, determining my staffing needs, creating an annual forecast and or budget, constantly working on Excel. And I often hear from my advisory board members here at Florida Gulf Coast University, where I currently teach, as well as at other advisory boards at other universities where I've worked. I hear your graduates need to be able to read a P&L. And most interns don't have a working knowledge of Excel. We need students that understand guest service, but they need to also have quantitative analysis skills. The difference between, I was talking to a industry professional the other day as part of a virtual internship program, and he stated that the difference between those that really reach the upper levels of management and do that quickly in their careers and those that don't, that kind of stay in that entry-level, mid-level management for extended periods of time, really the quantitative skills are the difference. I also hear frustrations from students. Students often come into our classrooms with this perception that I'm no good at math, or I just want to get through my accounting class. Debits, credits, I just don't get it. If it wasn't for the extra credit, I would have never gotten a C in my micro or macroeconomics course. I'm dreading my finance class. I won't take it to my very last semester. I hear lots of students that dread their quantitative coursework. And I really feel there's no reason for that because, to be candid with you, business math is not difficult in reality. Most of what our students need to know are simply addition, subtraction, multiplication, and division, and understanding of ratios. And I know my wife works at an elementary school, and I know in 4th and 5th grade, they start covering ratios. So, addition, subtraction, multiplication, that's all elementary school math. Sure, there's some basic algebra where we need to solve for X to solve a problem. But we also can use technology such as Excel to perform the tough stuff, interest and amortization, depreciation, installment loan payments and lease amounts and all that sort of thing. So in summary, the math skills our students really need and the analysis school students they really need is to be able to look at a profit and loss statement and know, are their expenses in line? Why aren't their expenses in line? What's their payroll costs as a percentage of corresponding revenue, et cetera. And the only way we accomplish that in the classroom is to incorporate it into lots of our courses, into as many courses as possible. So the keys to understanding: frequent exposure, familiarity. We want our students to be very familiar with a profit and loss statement, with calculating a expense ratio, with calculating a key performance indicator like revenue per available room, or any of these basic calculations and quantitative measures that we use in our industry. And the best way to make certain our students understand it is if it doesn't get delivered in just one course and we say, okay, well, we covered that in accounting, we don't need to cover it anymore. We need to cover it in all of our courses, or as many courses as possible or reasonable. In addition, we have to put the numbers in context, give specific business examples. Again, debits, credits, T accounts, those are somewhat theoretical in how they're describing accounting, but everybody understands money in, money out. You can relate it to your personal finances, right? Think of money coming in as that's money going into your bank account. Money going out, expenses are money coming out of your bank account. Simplify it and relate it to their own personal life. So the first thing I want to talk about, obviously, financial statements. A financial statement provides a snapshot of the financial standing of business at a specific point in time. Again, these are terms that I like to define in all my classes at the beginning of the semester and throughout the semester. The more students hear these definitions, the more students understand these concepts and are exposed to them, the more familiar they become and the more comfortable they become. A balance sheet, a financial statement that reflects the assets and liabilities of a business at a specific point in time. I've even had students sit down and create a personal financial statement. And I say, start making a list of everything you own of value. Okay, so you own clothing, you own a bed, you own a car, you own this, you own that. Make a list. How much money you have in your bank account? Okay, those are your assets. Now create a list of what you owe to other people. You've taken out some student loans, you have a credit card with a small balance on it, you have a car loan, whatever it is. That's the essence of a balance sheet, related to their personal life. But the financial statement I really focus on the most is the profit and loss statement, because when you graduate and go out into the world, you're going to be looking at a profit and loss statement every single day. When I was in the hotel business, we used to produce a daily revenue report outlining all of our revenue, where we stood for the previous day and where we stand month to date. That would also usually have a payroll number, where we stood in payroll expense. It would also have my food costs and my beverage costs based upon purchases month to date. It's in a P&L format. At the end of the month, we produce a financial statement and I go over it with the entire management team. Basically, what students need to understand, a profit and loss statement is really, really simple. Revenue is all the money that you take in, all the money that is collected by the business from customers in exchange for goods, products, services, and experiences. That's 100% of the money you get from customers. Then you simply divide up the pie. Part of it goes to cost of goods, part of it goes to payroll, etc. Again, it sounds very elementary and somewhat fundamental, but I always start every class at every semester with let's talk about the business of hospitality and the profit and loss statement. One of the goals of any business is to fulfill an economic objective. And then how does the course I'm teaching that semester relate to fulfilling that economic objective? So again, frequent exposure, as many courses as possible across the curriculum every semester. Give them frequent exposure, particularly to the profit and loss statement. Everything is in that same format. We'll get to that in a moment. Give specific business examples. They can understand the concepts when they're put into context as opposed to talking theoretically. And students can relate to their own finances. Most students operate these days at a loss, right? During your student days, your expenses often exceed your revenues. And that's why mom and dad have to help, or you have to take out a student loan, or you have to do what you have to do. But again, students can relate to that. A business needs to ensure that it generates, there's a piece of the pie left for profit. Okay, so P&L basics. Every P&L contains the same information. The top line is always the same. Every profit and loss statement always starts with revenue. How much money do you take in from customers in exchange for products, goods, services, and experiences? That's your revenue. The first thing we deduct are our cost of goods sold. I always explain to students that cost of goods sold, that's what leaves the business with the customer. So when they come to a restaurant, they're going to consume food and they're going to leave the building with that food. The food doesn't remain behind. So that's cost of goods sold. If they go to a retail shop and buy a set of golf clubs, the golf clubs leave. That's the cost of goods sold. When they have a beer, they drink the beer leaves with the customer. That's cost of goods sold. Next, we have labor. The largest variable expense in most hospitality businesses is labor. So that's our next cost. So we have labor, which of course is salaries and wages, as well as payroll taxes and employee benefits, or PT&EB. Then we get to our other controllable expenses. These are the operating supplies that we need on an ongoing basis. These are the paper products and the office supplies and the other controllable expenses that we have control over. Laundering, the cost of laundering the linen, replacing linen that's damaged or lost, etc. Controllable expenses. Then we have our undistributed operating expenses, our overhead for the operations. This is like the cost of our general manager, our human resource staff. These are expenses that are not associated with any specific departmental revenues. Then we get to gross operating profit. So most operations managers, their first 5 to 7 years in the business, their focus is just going to be on those first 6 lines. How much money are we taking in? What's the cost of the actual goods that I'm providing to the customer? What are my labor costs? What are my other controllable expenses? That's really my focus as a guest services director or an executive housekeeper or a restaurant manager, a frontline manager. So we need to make certain that students understand those key concepts. Then we can get into overhead, EBITDA, and all those other expenses down to net income. So again, my message is really, I like to focus on those first 6 lines. Okay, so this is a profit and loss statement for a hotel for 1 year of operating results. And this is actually from an Excel spreadsheet that is generated by students in my lodging class. They complete a project where they actually put together an annual forecast for a hotel concept that they decide to build on a site that I assign them. I'll explain more about that in a moment, but I just wanted to go through, the basic profit and loss statement. This ties in with that previous slide. At the top are some basic statistics: how many room nights occupied, occupancy percentage, my average daily rate, and my RevPAR, revenue per available room. We're all familiar with those key performance indicators. So here's my profit and loss statement. It starts with revenue from the rooms division, food, beverage, other food and beverage subtotal, of course, and then my other operating revenue. So this hotel took in $25 million. We have our departmental costs and expenses. So these are the payroll, cost of goods sold, and controllable expenses for each of the operating divisions. So I did 15.8 million in rooms revenue. I had 3.85 million in expenses. That's payroll and other controllable expenses. Food and beverage revenue, again, 3.7 million total in revenue. And in expenses, $2.5 million, or 68% of sales. Here's my departmental profit. Basically, I take my food, my rooms revenue minus my rooms expenses, and I get my rooms departmental profit. You can see that 75.7% plus 24% add up to 100%. So my rooms revenue is $15.9 million, $15.88 million. My expenses are 24% of that. Therefore, my contribution margin is 12 million, or 75.7%. Again, we're going to talk more about how I get students more familiar with these numbers and learn how to calculate themselves in just a moment. But anyway, I go through a Excel spreadsheet, explain it to the students what all the different numbers are. So here are my departmental profits. Then I have my undistributed expenses. Administrative in general, that's the cost of my general manager, my administrative assistant, my controller, my human resource staff, and all the expenses associated with the administrative and general aspect of the hotel, legal expenses, that sort of thing. My marketing expenses, my director of sales, my sales managers, all my advertising that's done at the property level, administrative assistants in the sales office, etc. Franchise fees related to sales, loyalty program, and marketing. Property operations and maintenance. Again, this is the maintenance, the director of maintenance, my maintenance engineers, my costs of repairing equipment, and all my operating costs associated with the repair and maintenance of the facility and equipment. And then energy, of course, or utilities. Why are these undistributed? Because the maintenance team, the general manager, the sales team, they're not assigned to focus just on the guest room operation or just the food and beverage operation. They're focused on the total hotel. That's why they're undistributed. They're associated with all these revenues. My sales managers are booking conventions and groups that are generating rooms revenue, but also holding meetings and events in my meeting space, which is generating food and beverage revenue. So their payroll needs to be applied to all revenues. So these percentages here, the 7.5%, my A&G expense is $1.895 million on total revenue of $25.27 million. So my 7.5% is my A&G divided by my total revenue. That's how I get the 7.5%. So I go through statements like this all the time with my students so they become familiar with them. They're going to see them in a lodging class. They're going to see them in a revenue management class. In a human resource class, I even talk about Just so you know, we're talking about human resource department. That's the expenses to perform the human resource function fit into this administrative and general expense. That's where my human resource director, that's where their salary is, and all the expenses they had to run ads to recruit employees, and if they do pre-employment assessments and where we charge those costs, they go to administrative and general. No matter what area of the hotel or hospitality operation I'm talking about, I want to make certain that they understand how does human resource department, if I'm teaching a human resource management course, which I will this fall, where do they fit into the financial statement? And so again, my operations team is really focused on gross operating profit. Okay, again, these are key terms. I won't belabor the point, but I make certain that I always start the semester. Okay, who can tell me what revenue is? And then I have students define revenue. How about what's an expense, a cost to incurred to provide products, services, or experiences? The profit, what's profit? The amount by which revenue exceeds expenses. We talk about there's different levels of profit. There's gross operating profit. There's also EBITDA. We talk about contribution margin, okay? Revenue minus the variable costs necessary to generate the corresponding revenue. So if I want to look at contribution margin for the rooms division, and I go back to this P&L, that's this departmental profit, right? $12 million in this particular hotel, okay? So I make certain that I am constantly defining these terms consistently in all my classes. So hopefully if a student has 2, 3, 4 classes with me over the course of their career, they've heard these terms multiple times, and it's going to be reinforced, and they're going to become very familiar with the definitions of these terms. I'm always surprised how many seniors can be confused between revenue and profit. Revenue is not profit, profit is not revenue, but they certainly are related, and we need to understand how they're related. And again, the more we reinforce that, the better. So the strategies that I employ to try to make certain that every single student understands a P&L and understands a quantitative analysis of the profitability of a hospitality business. I relate every business class to the P&L, like I just mentioned with the human resource class. A business is created to fulfill an economic objective. How does this topic, whatever the course is, relate to business performance? How do concepts in this course impact, or how do concepts in this course impact the P&L? Students need to understand that. Clarify key financial concepts in every course: revenue, cost of goods sold, labor, controllable expenses, etc. And then require some quantitative reasoning with each assignment that you do. At a minimum, ask the question, how will this strategy potentially improve financial incomes for the organizations? So for example, in human resource management, we'll talk about strategies to make better hiring decisions and to lower employee turnover. Why do we want to do that? Well, because employees will be more efficient, they'll deliver better experiences for customers. Better experiences for customers results in higher revenues through customer loyalty. It also relates to higher prices because customers are willing to pay for a better experience. It also relates to the financial statement in terms of lower expenses. It costs money to hire more employees, to train new employees, etc. And employees, as they do a job longer, should become more efficient at performing that job. So therefore, our employees are more productive, lowering my expense. So that's how human resource management impacts financial income outcomes. And I'm certainly going to ask that on their final exam to make certain that they understand the key point. In business, decisions are based primarily on their net financial impact. I always encourage students, I'm teaching resort and hospitality strategy this summer, and I always tell them it's wonderful that this business strategy you want to employ is going to improve the customer experience. It's great that it's going to have this positive impact on business outcomes. But how does that translate into financial impact? I always use the example. I would never go into an owner's meeting. When I managed hotels, I had to meet with the owners of the hotel on a regular basis. And I never went into a meeting saying, oh, we need to renovate our hotel rooms and spend millions of dollars on a renovation because it's going to make our rooms nicer, because the guests are going to be happier. What the owners want to know is, okay, because the guests are happier, because the rooms are nicer, how much more are they willing to pay for the room? And how does that flow through to bottom line profit? How is that going to impact my ability to compete with other hotels so I can get a higher occupancy? Always get your students to focus on the net financial impact. Yes, they need to know qualitative reasons too, but qualitative reasons should be driving financial reasons that really give an economic reason to make the investment in whatever initiative or business strategy you're proposing to employ. One of the keys to using Excel templates, Excel in the classroom, is to create templates. I always encourage my students to bring their laptops to class. I have students open the template. I'll usually post it on Canvas, tell students to go into the assignment that they need to do. There's a template there, open up the template and let's work with the template. And I have them follow along with me to create or amend a spreadsheet. Then the assignment that they have to submit actually requires further use of the template. Let me show you some examples. I sent, actually Kendall Hunt on my behalf sent each of you a spreadsheet that looks like this, a food and beverage cost control spreadsheet that I use in my food and beverage cost control course. I'm gonna, in just a few moments, actually walk you through how I would use this template in the classroom to teach students the basics of food and beverage cost control. What we do in class is we transform it from this to this, which is the completed spreadsheet, where I'm looking at what is my theoretical food cost, what's my actual food cost, how much variance is there, etc. So we'll walk through that in just one moment. I delivered last spring a catering and events course. It's a course that has a lab component. The students propose an event. I give them parameters. They propose an event. They create a menu. We literally order all the food, go into the culinary lab, prepare the food. They order all the decor and the decorations, etc. They set up a sample. Here's how the table would look. Here's how the centerpiece would look. They set up a buffet line where they serve the food that is on their menu. We have people come in and evaluate all the groups' presentations, etc. So it's very much a hands-on lab-oriented course. But in addition to planning the menu, preparing the menu, ordering the food, preparing the food, ordering all the decorations, decorating the room, they also have to submit a profit and loss statement. I'm sorry, it's jumping around on us here. This is the profit and loss statement. So if they were to do the event with the menu they planned, the decorations and decor they planned, the entertainment they planned, how much contribution margin would that event generate as far as revenue, cost of goods sold, labor cost, and my miscellaneous costs, audiovisual services, decor and lighting, entertainment, etc. So they create a profit and loss statement for this particular event that they put on. So yes, it is very much this is a very minor aspect of the course, but I want them to always know that you've got to relate delivering an experience to customers with what's the financial results of doing so. And in this particular example, in class, I teach them there's actually two different ways to staff depending upon how you compensate your employees, whether the service charge is paid directly to staff or if it's retained by the house and you pay your staff an hourly wage. Different states have different rules on that. But anyway, that's another example. This is a resort and lodging operations course. This is a 5-year forecast of a hotel. I give the students a site and say, here is a site that actually exists. This development plan was for a hotel being built next to an arena that's just a couple miles from our campus. I pick a site usually close to the campus so students can actually go over to the site. And then they projected financial profit and loss, and it's a big involved spreadsheet to create this. I'll show that to you at the end, but it's a hotel development project. What I'd like to do now is actually ask each of you to open your Excel spreadsheet that was sent to you. And it should look like this at this point. If you open that and just follow along with me, I'm going to do this exactly as I would do it in an actual class. So this is a potential menu abstract. Obviously, a restaurant is going to have more menu items than this, but it's enough to get you started so that students understand. You can always do an abbreviated menu. So what this is we've got some salad items, we've got some sandwich items, we've got some entrees, and we have some dessert items listed in column A. First, we're going to talk about how would we price these items, assuming this is the cost of producing a side salad. It costs $1.12. A Caesar salad costs $2.14 to produce. If I add chicken, it's $3.12, salmon, $3.62. So this is my cost of goods to produce these menu items here, listed in column C. Over here in column F, I would pull this from a point of sale system. A point of sale system is going to give you a menu abstract. It's going to tell you at the end of the month how many side salads did you sell, how many Caesar salads, how many chickens, Caesar salads with chicken, how many Caesar salads with shrimp, etc. So this is how many of each of these items in column A I sold, listed in column F, okay? So from this, we can determine where the pricing should be, what our cost of goods sold will be as a percentage of the price, what our gross margin is, what our total revenue is, and what our theoretical cost of sales should be based upon this mix of sales. We'll worry about these numbers down here at the bottom in just a few moments. This tells me how many total items I sold and how many guests I had. Okay, so in pricing, one thing I always drill into my students in the food and beverage business, of course, you all know this, is that the prime cost of goods sold or cost of food cost and labor costs combined usually totals around 58% of revenue. It's right around 30% each, right? You run about a 25 to 30% food cost and about a 25 to 30% labor cost. And those two are directly related to each other, depending upon how processed the items are that we start with. More highly processed foods runs a little higher food cost, but a lower labor cost. At any rate, so I always say you want to run a food cost somewhere between 25% and 30%. So how do we price our items? Well, we know very simply. I have students go to cell B3, type in an equal sign. We always start a formula with an equal sign. I always talk in formulas because then students understand the calculations. And I might ask my students, if they've had other classes with me, they know the answer. How do you calculate the price you should charge for each item. Well, you take the cost, so I go equal sign, and then I click on cell C3. Please follow along with me. Equal C3 divided by my targeted food cost. So let's say I want to run about a 25% food cost. I just divide by 0.25. So I hit slash for divide by, and then 0.25, hit enter. And so I should charge about $4.48 for that side salad. Now, the other reason I tell students to always work with formulas, because Excel is your greatest friend. It makes things quick and easy. If I take my mouse and take my little white plus sign and drag it up over the bottom right-hand corner on top of that little square, it turns into a black plus sign. I can click my mouse and drag right on down, and I just copy that formula into all these cells. Hopefully all of you got that. I'll do it one more time, the whole process. So what I'm going to do is first I'm going to go equal C3, click on C3, divided by, which is a slash, 0.25. That gives me my approximate price. I then just take my little mouse here, click on the corner, drag it down, and I've just put that same formula in all these cells. Now I tell my students, you're going to adjust those prices based upon a competitive analysis of other restaurants in your area, and I usually round them off to the nearest quarter. So this, I might charge $4.50, so I'm just going to type over $4.50. This one I'm going to go $8.50. I'm going to go $12.50 here. I'm going to go $14.50 here. I'm just rounding them off to about the nearest quarter. Might go down, might go up. It really, again, you're going to determine that. I don't need a formula there, so I just delete it. My bacon, I'm going to take my burger here. I'm going to run a little higher food cost on that. That's all right with me because I went on the low end. I went 25%. I want to be between 25 and 30, so I can actually round this down a little bit, and it's going to keep me in that mid to high 20s. 16 point, oops, I can't remember what the number was, 16.75. Don't need a formula there. Pasta Primavera, 19.25. People don't want to pay too much for pasta. New York Strip. Now, on New York Strip, I can actually take that price down quite a bit. And the reason why is because my margin's going to be bigger on that because it's a higher priced item. So I'm going to take more. Remember, we take money to the bank, not percentages to the bank. I always have to remind students of that. So on a steak, I might run more of a 30% food cost. What would that be? 0.3, 40, 50. So why don't I go 39.50? That's going to help me sell more of those. And you can see 39.50 minus the 12.50, I'm still making a better margin on that than I am on most of my other items, even though as a percentage, it'll run a higher food cost percentage. But those are all little nuances you can talk about as you're going through with your students and talking about where you're going to price things. Okay, I don't want my desserts to get up over $10. So I'm going to price these. People will pay a lot for chocolate, right? There we go. So let's say that's where I decide to price these. So I go through and I might give a little more explanation on why I priced them the way I did, but that's what I'm going to go through and do. I'm going to do a calculation to see approximately where the price should be. Then I'm going to round them off to, even quarters at the end of the price. I then can go through and I can look at my cost of goods sold as a percentage of revenue. What's my food cost ratio? We calculate a ratio how? I ask my students. And they go, oh, Professor Collins, we do that because we go equal and we go C3 and we divide by the price. I take my cost divided by my price, and that gives me my ratio. You can see that's a little under 25%. Guess what? I can drag it again real quick, right on down. I then ask my students, is everybody with me? Everybody with me? Everybody got do your screens look like my screens? Hopefully you're with me. Again, I can show everybody that again if I want, but you can see that most of my costs are just over 25%. I'm going to go equal this divided by that. So equals, and you can always hit F2. If you go function 2, it'll show you the formula and show you the cells, even color-coded for you. That's another great learning tool. I always tell students when I give you a spreadsheet with a template, if there's a number there that's calculating you don't understand, hit F2 and you'll see the formula. Okay? So then I can take this, drag it down. So I'm not going to belabor this. I think you guys are obviously all pros at this, so I'll move along more quickly for the rest. But this is exactly how I do it in the classroom. So now what's my gross margin? My gross margin is equal to what? My price minus my cost of goods sold, right? That's my contribution margin for each item. Okay, so then I can just drag that right on down. If you didn't follow me with that, F2, there's the formula. It's B3 minus C3. Again, we're just adding, subtracting, dividing. It's not difficult math. Okay, so what's my revenue? My revenue is equal to my price times my number sold. So I go ahead and I calculate my price times my number sold, and I get my revenue. And again, I just drag it right on down. I don't need a formula here, here, or here, so I delete it. And now I can get a total revenue. How do I get total revenue? If I go to the top, there's an auto sum feature. I can just hit auto sum. Now, it's going to default to an adjacent cell with a quantitative value, but that's not what I want. So I've hit auto sum up in my menu bar at the top. Everybody see where I am? And then I'm just going to highlight. I actually want to add up all these numbers. So I just highlight those, and they'll be in the parentheses. Then I hit return. $58,968 was my total revenue. What's my cost of goods sold? It's equal to my cost of goods sold per item, C3, times the number sold. So side salads, I sold 119 of them at $4.50, $535.50 in revenue. My cost of goods sold, $133.28, which is 119 times my $1.12. So I'm going to put that here. Again, drag it on down. I then can go right here, hit my auto sum. It's going to add those up. And there we go. I've got my total. And I can get rid of the cells I don't need. As a percentage, these percentages are actually going to match what's in column D, right? My cost of goods divided by my revenue. 24.9, 24.9. See how they match column D? Because they're the same numbers. It's just doing the same thing. It's just multiplied by the same factor. So then I can take this and drag it right on down. I can actually go all the way down. By the way, we know when we get those asterisks, it's because the value is too big for the cell. So you can double click like this and it'll expand your column. Okay, so 26.3 should be my food cost. That's what my food cost should be as a percentage of revenue based upon this mix of sales. What's my average check? It's $58,968.25 worth of revenue divided by the number of guests that I had, or covers, which is right here. So my average check was $23.20. My food cost should be $15,500.98 based upon what it costs to prepare each of these menu items. You can see my highest cost item as a percentage is my New York strip, but it's also giving me the greatest margin with a $27 contribution margin. grilled salmon, a $24.93 contribution margin. So I want to sell lots of these, even though they run higher food costs. Again, we can talk about adjusting prices if we want to, if we think something's priced too high compared to the competitive set, and see how that affects everything. But this is how I explain food cost calculation for checking my food costs using a menu abstract from a point of sale system. And I've walked students through how to do all these calculations. I later might give them an assignment where I give them just the menu abstract with, here's your menu and here's how many items you sold. Here's the cost of producing each item. Go ahead and calculate food cost. Now we know that this is what I refer to as in this cell here, I'll highlight it. This is what I refer to as theoretical food cost or potential food cost based upon what it costs to produce the item. But in every food and beverage operation, you have a little waste, spoilage, whatever. So we have our actual cost of goods sold. What's our actual cost of goods sold? It's equal to your opening inventory at the beginning of the month, which I have down here in cell B28, plus the purchases. That's new food that came into my storage rooms during the semester, minus my ending inventory. And that gives me my actual food cost. So my actual food cost was $16,130. If I take that amount, B31, and I divide it by my total revenue, the $58,763, I get my actual food cost percentage. Got a little mistake there somewhere. There's my cost divided by my, there we go. Sorry about that, there was an error in there. So now I've calculated my actual food costs. I've taken my B31 and divided it by my G24, my revenue, got my actual cost, 27.4. Whereas my theoretical cost is 26.4. So now I can say, how much is the variance? The variance is equal to my actual minus my theoretical, or $629.05. So that's the amount of food that was lost. Either revenue wasn't rung up for that food, that was food that was wasted or dropped on the floor or stolen or pilfered or whatever. But there's a $629 discrepancy in my food cost. How much is that as a percentage of my theoretical food cost? Again, I can take that amount and divide by, I go equal, and I take that amount, that's 629, and I divide it by what my food cost should have been, and I see that I have a 4% variance, So this is my variance between actual and theoretical, or what it should have been, food cost, $629 that I would need to explain if I was a chef. But again, you expect a little waste, spoilage, damage, etc. It happens in a food service operation. So anyway, I wanted to walk through with everybody. I know that was a little bit cumbersome, but I wanted you to understand how I actually walk through a worksheet with students in class. And then I actually walk around the room, make sure everybody's got it on their computer. They've calculated the numbers. I help fix any problems. I have people check their spreadsheets against this, and they really get a good handle. Since I'm running out of time, I'm going to run through the rest of this presentation, and then we'll take some questions and we'll come back to that. But I hope that that gives you a pretty good handle of how I would actually work through a simple, relatively simple spreadsheet in a course. We talk about benchmarking performance. A financial benchmark is a reference point against which actual business performance may be compared. Typically in the hospitality industry, we're always comparing this year's performance against last year's performance, or we compare against a budget or a forecast that we've put together. When it comes to revenue performance, we're usually looking compared to a competitive set from STR data, and or we can look at industry averages. I just want to point out that you can get a lot of good benchmark data from number one, a good textbook. You also can get benchmark data from from Statista, a database. If I have time, I'll show you that. But there's lots of good industry statistics out there, and students should come out of our hospitality programs knowing where costs should be. They should know that most hotels run a contribution margin of between 75 and 80% in their rooms division. That, that prime cost of goods sold, and labor cost in a food and beverage operation runs just under 60%, about 30% each, or 58 cents on every dollar in revenue. So make certain that you're delivering financial benchmarks, and I'll show you some sources of that in just a moment. This is actually from a lodging textbook that I authored. These are benchmarks for the hotel industry. This gives revenue per available room, the amount per occupied room, and the annual for a typical 400-room hotel. What I did is I got data from STR through the Share Center, and I got year-end data for, can't remember how many hotels. It was 966 hotels comprised of 393,000 guest rooms. You can see here at the bottom here. So these thresholds come from that. The average number of rooms per hotels, these were all upper upscale hotels from Smith STR 2015 year-end results. You can see if I take the number of guest rooms and divide by 966, it averages 407 hotel rooms. To be candid with you, when I worked for Marriott, our average full-service Marriott hotel was right at 400 rooms. That was kind of the sweet spot for getting the economies of scale we needed. Around 400 rooms is what you have. So this is based upon that. The occupancy percentage in 2015 nationwide in the US was around 74.8% for upper upscale hotels. So a 400-room hotel is going to have 146,000 available. They're going to average 109,000 occupied, average daily rate, RevPAR, food and beverage revenue per occupied room, total revenue per occupied room, etc. GOP per occupied room. Again, give your students benchmarks to work with. And that's where all these numbers come from. That's where these operating margins come from benchmarks. Obviously, a number of you, I'm sure, use the STR data analytic or CHIA certification program to teach students about benchmarking in hotels. Again, I provide some templates of that and how those numbers are forecast on an Excel spreadsheet. I also explain how benchmarks can be used for forecasting. I have a very complex hotel development project template. And what I do in this template is I have students forecast a hotel's annual performance. The one that I showed you earlier, this one right here, with these year one numbers actually start out from a day-by-day forecast. And I talk about why you have to forecast day by day. But what I've done is see comp set 2018, comp set 2019, comp set two-year average. These numbers right here are based upon an STR data set that I got for a comp set located in the location close to the arena for the site that I gave students to develop a hotel concept, so that they can actually see how, gosh, when you forecast, you're really not pulling numbers out of the air because you get data. And I know that hotels in that area on the 1st of January run a full house or close to a full house the first couple of days of the year. And then they average around 83%, then 75%, and 73%, and 84%. So then I have students forecast by market segment, day by day occupancy. And this is what they're forecasting: 100%, 80%, 66%, 73%. And is it lining up with this? Down here at the bottom, as they determine, for example, if they need to add occupancy or deduct occupancy to be in line with the market. So I look here, total rooms sold or total occupied rooms. I'm at 7,800 rooms compared to a competitive set for a similar size hotel. I would need to be running 8,300 rooms versus 7,800 rooms. So I need to add 500 rooms. If I want to see where can I add those in on a day-by-day basis, I can come down here to the bottom and I have a day of the week analysis, Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. And for each day, I show what the comp set occupancy is and what the pro forma occupancy is, or the pro forma occupancy is the occupancy for the hotel I'm forecasting. So I can see that I'm forecasting 83% on Saturday nights and the market ran 93%. So that's probably somewhere where I can add some occupancy. Same thing on Friday. I'm forecasting 84 versus 91. During the week, I have a couple days where I'm a little high, 92 on Thursday nights, yet the market ran 89%. So I can, I'm also high on Sundays, 83% versus 70. I'm sorry, I'm low on Sundays, 77 versus 83. So again, I can tweak it. Now I'm probably getting into too much detail here, but I just want you to understand, you know, what students can learn by being required to go in and forecast occupancy and average rate, for example, for a hotel on a day-by-day basis using an Excel spreadsheet, because this is exactly what they'll need to do when they get out into industry. Now, they might not get it all in detail, but they're at least going to have exposure to it and understand the process, which is going to help them in their professional careers, because they're going to be able to they're not seeing it for the first time when they get out into the professional world. And I've had a number of students and industry professionals remark to me over the years that, gosh, sometimes it seems like students are seeing some of these concepts that they're seeing Excel for the first time when they get out into the business world. And you would think they would have more exposure to Excel as a forecasting tool and as a analysis tool while they're in a college business setting, business school setting. So again, I'll come back to this forecast in a little bit to show you how it can support education, hospitality education in just a moment. But I want to bring the prepared remarks of my presentation to a conclusion here by making a few more key points. Excel can be used for the tough calculations. Yeah, we showed how we can take the data and put it into a spreadsheet and then use the data for calculating the simple ratios and all that sort of thing. But there's also things such as standard deviation, probabilities, that sort of thing. Calculating for a hotel, for example, a hotel is a real estate investment, and the owners of the hotel are going to have to make mortgage payments or debt service payments on the debt they assume. Excel will calculate all those things. I don't have time to get into that level of detail in this brief webinar, but I'm happy if you want to contact me to show you how Excel can be used for some of the more challenging calculations that students need to do, or business professionals need to do, and our students will need to do once they're graduates. For example, we're all familiar with the empirical rule, which states that 2/3 of observations are within one standard deviation of the mean. And that's kind of, again, a theoretical thing that's hard for students to grasp. But when you can explain to students that if I go out online, and I have students do this, I have students go out online and collect room rates, shop hotels that they feel their hotel will compete with. And then I have them take and collect room rates, put them into an Excel spreadsheet, as you see on my screen here. And I put those rates in, and then I sort them from the lowest rate to the highest rate. And then I can use the data analysis tool pack, which is available in Excel, to calculate descriptive statistics, my mean or my average, and my standard deviation. Those are the two numbers I'm interested in. What's the average of the rates that are being quoted by my competitive set based upon an internet rate survey I can very easily do. And then I can calculate the standard deviation, which is calculated for me by Excel using the analysis tool pack. I'm sure most of you are familiar with that tool pack, but I can then take that data, I can take that information. If I know my average rate during the week is $187 and the standard deviation is about $20, I then can apply this empirical rule, which tells me that 68%, or about 2 out of 3 hotels in my competitive set, are charging within 1 standard deviation of the mean. So if my mean is my average daily rate, if the average daily rate quoted by my hotels in my comp set are $187 and the standard deviation is about $20, then I know 2 out of 3 hotels are charging between $167, $20 below my $187 average, and $207, $20 above my ADR. So I know for my rates to be in line that all my rates need to fall within $20 of the ADR for the observations that I collected in my rate survey. Again, I can do the same thing on the weekends. Again, it's $140 average rate on the weekends with about a $20, a little bit below $20. So again, I know between 120 and 160 is where most of the hotels are charging. If I go out 2 standard deviations, then I know that 95% of observations are within 2 standard deviations of the mean. So these are the types of concepts that we can teach, and students can get their heads around them because you're talking average rates, and you're talking what's the spread of those rates? Well, about $20 in either direction for 2 out of 3 hotels, and about $40 for virtually all the hotels in my market. So then I can start talking about how do I set up a range of rates in order to be competitive and optimize rates during high demand periods where I go no more than $40 above, or I don't need to drop it more than $40 below, and I can capture 95% of the market out there and be a reasonable rate to 95% of guests. So these are some of the things we can do with Excel. Again, when we start getting into more complicated calculations, I don't expect students to fully understand the math behind the binomial probability distribution. But Excel has a binomial probability distribution function where I can actually calculate the probability of selling a certain number of rooms, knowing that I'm going to get a certain number of reservation inquiries for the given night. And by counting how many guests accept that rate or turn down a rate, I can then determine that, okay, when I set my price at let's say $199, 80% of guests will book at that rate. So then what's the probability of selling 5 rooms if I have 10 rooms, if I'm expecting 10 more reservation inquiries? I can calculate those numbers. Again, the math is very complicated, but Excel simplifies that calculation for me. I actually explain all this. This is actually an excerpt from a textbook that I published on hotel management, and this is in the revenue management. And really what I'm trying to do here is get students to trust the technology and to understand that I may not be able to do the math in great detail or understand all the math, but I understand binomial probability, and I know how to use Excel to calculate these probabilities for me so I can make informed, smart decisions. This is actually the management, the manual calculation of those probabilities. I also talk in the classroom quite a bit about once we have data in Excel, we can display it graphically in a variety of ways, and we'll do some. I'll give them a trend report and show them how to create some graphs that can be useful in explaining data or better understanding data, or sharing data upon which you based a decision to, let's say, hotel ownership or in a management presentation. So again, I don't have time to get into all the detail on this, but there's just so many uses of Excel in your professional career. Students need to come out with some exposure to all the capabilities of the Excel software. This is displaying qualitative data. I'm looking at the negative, this is actually a case study analysis for the CVS case, which I use as a customer service example. It's a Harvard business case, and I have students look in the case study. It gives some data about typical complaints. Long wait for the prescription's not ready on time, et cetera. And I say, let's talk about how we can display that data in a way that helps me prioritize what I need to focus on improving in this case, the prescription fulfillment process. So there's all sorts of ways to use Excel in the classroom. So this webinar is about Excel, and a lot of professors tell me, well, in today's world, it's a lot easier and to use a business simulation. And while I certainly agree that there certainly are some good simulations out there that can teach students a lot of valuable things, I still would always prefer, if I had a choice of using a simulation or Excel, I would always go with Excel. And the reason really is simple. Excel is a business tool that I'm going to need to use when I graduate in order to make management decisions, to analyze data, to display data, to forecast, as I was talking about earlier. So I want to use Excel, and I want my students to have that ability. What I find with video games, and being the father of, they're now 3 grown children, but I raised three children, they're all in their 20s, and I watched them grow up playing video games. And the bottom line is, students, when you give them a simulation, they want to win. They want to win, beat the game. I remember my own children. They would do whatever it took to get to the next level of the game. They would look online. They would look at what they called the cheats or the shortcuts to find the solution that gets them to where they want to get in the game, as opposed to doing the math to figure it out. Let me explain a little further. So if I have a simulation, and in that hotel simulation have to determine what room rate I should be charging my guests. Now, I just showed you how you can use Excel and do a rate survey to figure out where your room rate should be using the empirical rule. What students will do, rather than go through that process of surveying the competition and calculating where should the rate be and what should be the lowest rate I charge and the highest rate I charge, they're simply going to go into the simulation and they're just going to experiment. They're going to put in a low rate, a medium rate, a high rate, an extremely high rate, an extremely low rate. They're going to play around and just plug in rates and see what results they get. In other words, they're going to play the game and game the system. They're not going to learn that in business, we gather information, we take data, we analyze the data, and the data analysis that we have then tells us the price we should be charging. So I start with room rates. I put room rates I should be putting room rates into the simulation that I've calculated that I should be charging based upon how you go about establishing room rates. But I'm telling you, based upon my experience with many, many students, based upon my experience with my own children, as I watch them go through college, they're going to game the system as opposed to doing the math. And learning how to beat a simulation and get the right answer out of the simulation doesn't necessarily mean that they learned the business skills and the business analysis skills they need to accomplish the task at hand. They need to know how to do the math, do the calculations, and make a decision based upon quantitative data that they've properly analyzed. Excel helps them do that. So what's the next step for you? Number one, what are your own Excel skills? Do you need to improve your own Excel skills? Take a class if you need to. Or are you good to go? Maybe you're very well versed in Excel, which is probably the case with most of you. So are you good to go? Are there some areas you can improve? I know that I am always working to enhance my Excel skills. I'm always learning new things I can do with Excel and how to do those things. So assess your Excel skills and continually improve your own Excel skill. Start out by identifying just one or two learning outcomes in each of your courses where Excel could be a helpful tool in delivering that learning outcome to your students. Each semester, try to add one or two or enhance one or two Excel assignments that you are using in your course. If you have a project or an assignment, how can Excel be added to add a additional quantitative component to that assignment? So just think about how can you add Excel into your classes. And if you know 2 or 3 of you are working together within your faculty to make your students more quantitatively able to improve their quantitative analysis skills, then all of a sudden, if they're seeing 2 or 3 Excel exercises in every one of their classes or in 2 or 3 of their classes every semester, they're going to become more familiar with it and become more well-versed at it. And it really boils down to having a commitment to making your graduates quantitatively literate. So I'm going to display on my screen my email addresses, my personal email address, michaelcollins@michaeldwayne.com or micollins@fgcu.edu, Florida Gulf Coast University, which is where I teach. I also give you my cell phone number. Feel free to send me a text, give me a phone call, send me an email. And I am more than happy to work with you individually to help address specific issues about your class. One final thing I want to point out before I take any questions is I have published a textbook with Kendall Hunt, Delivering the Guest Experience. And one of the things that I did when I created this, when I wrote the textbook, is all the quantitative information within this book. So if I go to any quantitative information within this book, I apologize. As I go to that quantitative information, I created every table, every chart, etc. within this book was created using Excel. And what I do in the instructor's resources is I provide the spreadsheet that I use to calculate these values. So here's an example in chapter 5, which is the revenue management chapter. I have key performance indicators and how to use STR and a STAR report. So if I go over to the resources for this particular chapter, I can go see chapter 5, box 5.1 STAR sample. I actually have the data that I used right here. I'm sorry, it's taking just a moment to open. Yeah, here's the data I actually used to create this information in the textbook, and that I used to calculate the RevPAR and all this sort of thing for these hotels. So I have all this information in Excel format available for every single quantitative example in the textbook, every single chart that I use in the textbook. I think I have some forecast data in here, etc. Anyway, all that information, there's that empirical rule. All this information is available Matter of fact, that's where I got this information that I displayed earlier. I have the examples so that faculty members can actually show students the data that's in the textbook on an Excel spreadsheet and how those numbers were calculated, all the formulas, et cetera. In addition, the textbook includes a hotel development project, and I've completed it tells you step-by-step how to assign this project to your students. And this is actually the master spreadsheet. I was showing some of the forecasts that was created, but this goes through step-by-step. Click on January tab at the bottom of the workbook. In E40, cell E40, put the number of rooms, etc. This goes through step-by-step how to complete the forecast. So you start, here's that January page we were working on. So it goes through in step-by-steps how you're going to forecast room occupancy, how you're going to calculate your your food and beverage revenues and your food cost and your labor costs, your room staffing plan. You put in these hours per occupied room productivity factors. Those are all in the textbook as benchmark data. Miscellaneous income, how you're going to forecast that, your franchise fees. Again, this is all right out of the textbook. It then generates a P&L, a 5-year projection, and even includes the mortgage payments using the mortgage payment tool in the debt service payment tool in Excel. So all this information is available with the textbook. And with that, I will end my conversation and open the floor to any questions.
Thank you, Dr. Collins. Well, one of the questions that has arisen rather frequently is, where do you primarily get your benchmarks?
Yeah, benchmark data. A lot of faculty members are curious about where benchmark data comes from. The bottom line is, go out and research it. Let me show you a couple things that I use. One thing that I use is all the universities, have access to all sorts of data databases. So in my management of food and beverage operations, I go to a database called Statista. You can see it in the bottom right-hand corner of your screen. Statista is a data tool, and they have all sorts of wonderful charts and graphs that you can use. So for example, here, restaurant industry, food and drink sales in the United States from 1970 to 2017. So this tells me how much revenue is generated in the restaurant industry. So then I can throw that into an Excel spreadsheet and I can look at growth by decade, right? I also can look at the number of restaurants. Well, guess what? Once I have the number of restaurants, I can simply, and they're from the same source. This is from the National Restaurant Association. This is from the National Restaurant Association. So what I can do is I can then take my revenue and my number of restaurants and I can do the math and I can quickly calculate how much revenue per restaurant. So there's all sorts of data. There's restaurant industry by type of restaurant or type of food and beverage establishment. Okay, so this is the number of quick service restaurants. This is the number of fast food restaurants, full service restaurants, etc. I've got cost. This has food cost. Okay, there's a number of employees in the restaurant industry. And let me show you how I brought all this together on a spreadsheet. This is food cost ratios in many popular restaurant concepts. All this is available online in my Statista database. Okay, how's the cost share of the casual restaurant industry? Wages 32%, purchases 28%. Remember how I said the prime cost is right around 60%, 32 plus 28, that's 60%. So we can look at all this data that's available and we literally can put together, I put together actually this spreadsheet right here. And all these numbers came from the Statista data where I talk about the revenue in the industry, the number of restaurants. And so then the revenue per restaurant, the typical restaurant does about 1.2 million in 2016, did about $1.2 million in sales, or about $100,000 a month. So that helps students put things in perspective. Cost of goods sold, labor cost of goods sold runs around 29%, just shy of 30. Labor cost runs about 28%, so 57% prime cost, those two combined. So then I can apply those percentages to this revenue in Excel, and now I've got a typical kind of profit and loss statement, if you will, for a typical restaurant. So this is my restaurant business model. Using those numbers, I know what a typical restaurant does. Earnings before interest, taxes, depreciation, and real estate expenses. So the typical restaurant earns about 12 cents on the dollar after paying all their variable costs. And then they pay about 6%, by the way, in rent. I found that on another chart talking about cost of rent. And so then I can put together data accumulated on an Excel spreadsheet and calculate some industry percentages. Here's another tool that I use that I found online. This is from Baker Tilly, a restaurant consulting firm, and they have benchmark data right here that's available. Again, food cost, all clients, 29%. Labor cost, 28%. Prime cost, 57%. EBITDA, 12.2%. You can see how it breaks between full service and quick service restaurants. Okay, so the quick service have a little bit higher food costs, a little lower labor costs, and full service restaurants vice versa. So there's lots of benchmark data out there. On the hotel industry side, I use STR data, and again, I have all that data in my hotel management textbook. Food and beverage revenues per occupied guest room, labor costs per occupied room, everything. Sorry for that lengthy answer. Oh, one other thing I should mention, another good source is to go to publicly traded companies. This is actually some data that I collected. I just went to Darden Restaurants, is a publicly traded company. Of course, we know that they have a number of restaurant chains from Longhorn Steakhouse to Cheddar's Scratch Kitchen and Yard House, which is a microbrewery, Capital Grill, Bahama Breeze, etc. And I compiled their data, and you can see the same thing. Revenue, this is per restaurant. So they do about $4.7 million per restaurant. Their cost of goods sold runs about 28%. Their labor cost runs about 32%. So again, you see that magic 60% or so in overall cost. So I created these benchmark data, or this benchmark data, just by pulling information from Darden Restaurants, which runs, hundreds of restaurants. As a matter of fact, this tells you how many restaurant seats, so you can calculate it per square foot and all sorts of things.
Excellent. Another question is, in the pandemic situation, has that impacted any of the Excel assignments that you give?
Well, quite frankly, it really caused me to expand on some of those Excel assignments, because I had students working at home, and so therefore they had more time. And for example, in my catering and special events class, I couldn't do some of the lab work, so I just replaced some of that lab work with some additional quantitative work. And I had students cost out their menus. Let me show you some quick examples of that. If I can find the file real quickly. But yeah, in my revenue, I'm sorry, let me go to this real quickly. Yeah, in my catering class, I had them do a little bit more extensive work on the cost side of things. It's my 3802 class, in-class material. So what I did is I sorry, that's the wrong one. So I had students go in this particular class and they couldn't put on the event like they did in the past. So I had them create a presentation of the event, and they did everything they would have done, but I had them create the BEOs. But then in addition to the BEOs, I had them cost the menu, and you can see this is a recipe card done on a Excel spreadsheet. And then I had them create a profit and loss statement for the event. And as in the past, I haven't put as much emphasis, because it's a lab class, I put more emphasis on the food production side. But again, I added some quantitative exercises since the students had to work from home and we couldn't do the lab work. So I replaced it with some, I figure they can always use better quantitative skills. So that's indeed what I did, is I added a quantitative component. I'm actually looking for oh, there we go. So I had them put together their recipe cards, which they had to pull a recipe card before, but I had them actually research and cost out their recipe. And then I had them create a banquet check. So I had them create a banquet check. There we go, banquet check for the event. And then the contribution margin calculation for the event, which was not originally going to be part of the exercise.
Wonderful. Well, thank you everyone for joining us today. If you'd like to receive more information on implementing Excel in the classroom, you can reach out to Michael directly at the email addresses he provided or by cell phone. If you'd like to request a review copy of his book, reach out to Deb Roth at droth, R-O-T-H, at kendallhunt.com. He's also the author of Make It Count, Getting the Most from a Hospitality Internship, also published with Kendall Hunt. Thanks for joining us today, and everyone have a wonderful afternoon.
Thank you.